Hello everyone, and welcome to this week's Motor Trade Radio podcast, powered by eBay Motors Group, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Curtis, do you ever remember the day? I mean, it seems like a distant, very distant memory, but when it started to slow down as you headed towards the end of the year in the automotive sector?
Yeah, when exactly was that, Phil?
It seems a long time ago now, doesn't it?
It does indeed, yeah.
So,
I mean, just looking at headlines for this week's show, there's a lot going on at the moment. And yeah, we'll kick off in a minute with some updates and clarifications and events. So there's no slowing down in the final quarter.
There isn't. It's getting to that Q4 busy time of the year and everything else that's going on. And I don't think anyone's thinking of 2024 yet. I think they're still trying to sort out this year. But
yes,
we'll get onto that.
Exactly.
So first one, shout out is over at Car Dealer. And this is that the Used Car Awards 2023 shortlist. The Car Dealer's in the frame for our big night out, is what Car Dealer are saying there. That the Car Dealer is in the running for the Used Car Awards 2023 have been revealed. Shortlists have been whittled down following a tough round of mystery shopping, and those named will go forward to the awards night at the brewery on Monday, the 27th of November. So the dealers do enjoy this event, don't they? I think
they do, yeah, and it does look like a particularly good event this year because there's 25 categories. There's 5 finalists in each category. And as you say, most of the categories are for dealers, used car dealers and dealers selling used cars, with a couple of car maker categories. So, that's going to be a fun night, isn't it?
It is. And we won't go through the whole list. You can see the short list on Car Dealer magazine, Dealer's Dealer. You've got people like Jamie Chappell in there from Car Key. You've got Steve Deshi from SUV Prestige, amongst a few others, and friend of the show, Mr. Samani from Specialist Cars of Stoke. And they've got quite a few categories, as you say there, from social media users to use of videos to websites, etc. So there's a big list of categories that some of these dealers have got the opportunity to win an award for and runners up. So yeah, it's going to be a fantastic night for some dealers anyway.
Yeah, and Phil, guess what? We've got an update on Pendragon.
Oh no!
Right, we've been running this story pretty much every week for the last couple of months, but the latest update, and it could well be the final update, who knows, is that Lithia now owns Pendragon following a 99% shareholder approval for the £397 million deal. So only 1.1% of shareholders voted against it. And looking at some of the implications of this acquisition, it'll add $4.5 billion to the US-based Lithia's annual revenues, and it extends its UK footprint following the acquisition of Jardine, which was only in March this year. So it just shows how quickly this year has run away with us, because that's not even 12 months ago now.
Yeah, and as you say, I mean, there's a lot to work out with the deal in the way it's being structured because of the split of the Pinewood business that's going to continue in terms of a new Pinewoods technologies business that will remain on the stock market that's currently being initially valued at 10.3 pence per share. And obviously Lithia are looking at where that can be expanded and growth through places such as across Europe and the rest of the world and into North America, in addition to their own businesses of Lithia. I think they are talking about this deal as being basically done. There's obviously the CMA and the OEMs that still need to approve it. But it's a significant deal, and I think this was obviously out at the forefront, weren't it? I mean, it's been a long time coming for this, because obviously of 12 months ago, I think it was near enough, wasn't it, when this kind of started in the first place. So 12 months on, it looks like with 99%, as you say, Curtis, of the the support of the stock shareholders of vaulting it through, and no rivals, because they're backed out.
Exactly, yeah, and the whole Pinewood aspect. I mean, that's a story in itself, and we'll see how that one pans out. But it does effectively become a standalone listed company under the stewardship of Bill Berman, who I guess we can now call the outgoing Pendragon boss, because he'll lead Pinewood. And Lithia will be a shareholder in that business. And I was looking at some of the details in this story. There's really good coverage on Automotive News Europe of this story. So Lithia retains a shareholding in this new Pinewood tech business, and it will effectively open up 2,500 dealers in North America to Pinewood's DMS. And it'll increase the size of the Pinewood business by 30%. So, this is big news for Pinewood as a standalone.
Yeah, and this week we are returning to Stephen Whitton for the latest Men Able moment, who obviously looking at the mental health and mental wealth of the car retailing sector. So stay tuned for that partway through.
Yeah, and as we record this, we've just had early sight of the Cap HPI editorial, which looks at the used car value trends over the course of October. Now, we will be talking to Darren Martin from Cap HPI next week, so we'll run a standalone episode on that. But what was your early thoughts on the figures there, Phil?
Yeah, I mean, we knew that there was a significant readjustment starting to happen across the sector as volumes start to return. I think it was muted partway through the month, where Cap had highlighted that the values were shifting ahead of what they probably expected in October for going into November. But as you say there, the figures are out, and we won't go into masses of detail because, like Curtis said, we've got Darren on next week that will go into a little bit more delve into the devil in the detail of what's been happening within it. But the headline figure is that 3 years 60, which is the index benchmark, is down 4.2% overall. Which is significantly ahead of pre-pandemic levels in the main. I don't think we've seen that kind of movement from October into November at all. I mean, that's going back to 2005, and we haven't seen that kind of movement even in 2008, which was the financial crash. It was 3.5%, but it was also down 4.1% and previous high levels previous to that. So in isolation, the month of October into November, it's a significant drop. But again, what Darren and I always talk about on our monthly catch-up and, with these calls, Curtis, is always they're still coming down from a very high point.
Yeah, exactly.
There's still a way to go. Even after this movement down, there's still a significant way to go for a lot of the vehicles to get anywhere near pre-pandemic prices. So it's probably a point that we will touch on with Darren when we get him on next week.
Yeah, as he usually says, there's a lot of moving parts, and that there'll be even more so, I guess, with October, as he goes through what actually led to the 4.2% drop, which is the equivalent of £850.
Motor Trade Radio podcast, powered by eBay Motors Group.
Headlines this week are from Car Dealer, AM, Motor Trader, Motor Trade News, and Motor Finance. So I think that's a full house of the dealer press there, pretty much. Yeah. So starting with Cox Automotive publishes annual report and is once again the first out of the blocks with its 2024 new and used car sales forecasts. Negotiating a fair price with dealers is the biggest worry for car buyers, finds the latest consumer research from eBay Motors Group. Mark Lavery, friend of the podcast, launches Cambria investment company to boost automotive sector and appoints Mike Allen to lead it, another friend of the podcast. So we must get one or both of them on to let us know what's happening. Yep. Big Motoring World's ambitious nationwide expansion plans steps up a gear following the acquisition of 2 available car sites. Maintenance plans payable by monthly subscriptions are on the increase, reports EMaC. and why strong RVs will be crucial to the success of new Chinese brands entering the UK.
Yeah, so a lot of headlines, Curtis.
There are a lot, aren't
Yeah,
there?
yeah. So yeah, you mentioned there the Cox Automotive Insight report for 2023-2024 is out just as we record this week's podcast. This is a baby that I've worked on for 5 years now, in collaboration with Grant Thornton. But clearly, this is where we try and forecast, which is getting more and more challenging. Forecast where the new and used vehicle market is going into sort of 2024 and beyond, and some of the challenges and evolution of the sector, where that's where the retail sector is starting to shift, and it kind of adds into everything we talk about on a weekly basis, Curtis, through all the headlines, doesn't it?
It does indeed, yeah. And what particularly interests me about the annual report are these forecasts that you do, because they're pretty accurate, I must say, Phil.
Yeah, yeah. Some forecasters say that luck or judgment, but yeah, it's not doing too bad.
Yeah, but you've actually got the forecast for 2024 in terms of new and used. So are you in a position to share those?
Yeah. So we always try and forecast sort of an upside, which you would class as your sort of best case scenario, your baseline, which is probably the most likely, and then your downside, which is obviously in terms of a worst case scenario. And what we try and do for both the new and used vehicle sectors is try and put a little bit of scenarios of what could happen that would result in a best or upside outcome for the forecast, and then obviously what is probably the more likely, knowing the current position that we are in terms of the economy and things like this, and supply and demand. And then worst case, if the economy does start to worsen or supply challenges continue to return and things like this. So yeah, we have forecasts to say, you alluded to there, Curtis, our baseline, or most likely for 2024, is just over 2 million at 2 million point and 2.02. So they're just marginally over 2 million with an upside of 2.2 million. The baseline would result in a 4.3% increase compared to our predictions for this year, which are around the 1.9 million new car registrations. But it will still be a marginal fall or decrease compared to pre-pandemic levels between 2000 and 2019 of about 12.4%. Now, obviously, some of this is all dependent on inflation, interest rates, consumer confidence, business confidence, the cost of living, and things like this, and obviously the whole supply and demand. And what we've tried pointing out on this year's Insight report is obviously with the changes, things like the acquisition of people like Lithia and others coming into the UK automotive sector, transition to agency, which is something you and I talk about on a regular basis, Curtis, and the transition to electric vehicles, where that's from legacy OEMs or new entrants from the likes of BYD and Great Wall and others, all influencing where the UK sits. And for used, our forecast is 7.3 million for 2024. That would be a fairly stable market compared to our forecast for 2023. And then, an upside of about 7.6 million if the wind is behind us and we start to get ahead of some of the challenges that we're facing.
Yeah, I mean, these are really interesting, Phil, because that forecast of 2 million, just over 2 million for the new car market, that'll be the first time it's nudged over 2 million for a few years now, certainly pre-COVID.
It will be, yeah. And I think sometimes within the report, we try and shed a light on terms of true historical figures, because you constantly get asked, when will we do 8.3 million used car transactions, when will we do 2.6 million new, whereas in reality those are not the norm. Those were peak heights following the financial crash of 2007 2008. So we're trying to shed light in terms of what is the true automotive volume for the UK marketplace. So yeah, we try to delve in that a little bit in the report.
And anyone wishing to get hold of the report, so what's the best way for them to do
Yeah,
that?
just head over to the coxautoinc.eu website, and you can log in and download the report there. And so that's coxautoinc.eu, and you'll see the relevant details there that you can download the report. And it's in collaboration with Owen Edwards at Grant Thornton, plus some a good list of industry experts having their perspectives on each of the sectors that we've covered within this year's report.
And the way you're hosting it online, is it similar to previous years where you can go in, look at different sections, and there's animation, and it's very well presented?
Yes, yeah. So you can go in each section as you want to look at certain areas. It's not just the one big document, and you can download it as well, each section. So the team's done really well with this year in terms of the whole visual look and feel of it. So please do have a look and download it where possible.
So presumably that means you can put your feet up for a couple of weeks now, Phil.
The fun kind of begins now. I've got to start talking about it. So it's not over yet. But,
Okay, so meanwhile, back to the headlines. The next headline is from Motor Finance, and it is negotiating a fair price with dealers is the biggest worry for car buyers. So this is based on the latest consumer insight panel research from eBay Motors, which is a sample of just over 2,000 decision makers. And I did work with the guys on this release, so I did see the data, and it is actually really, really interesting. Just identifying some of those pinch points, some of those worries that buyers are addressing. But it's found that the biggest concern, the biggest challenge for both used and new buyers is actually having conversations with dealers about prices. And it highlights that other main bugbears cited by users include knowing what to check for on test drives, that was 38%, and part exchanging their existing car against the value of their next one. But it really is this whole issue around pricing, which is sort of uppermost on the minds of buyers when they go into a dealership, because they don't actually like the negotiating, or they're concerned about how that negotiation will go.
Yeah, no, it's always a challenge, isn't it? That you get one part that they enjoy the negotiation. When we talk about agency model and this transparency of pricing, and people say, "Well, no, we like to be able to negotiate," but actually, they don't, do they? In general, I mean, I know obviously some people do like the negotiation process, but others just don't like it, do they? They don't believe that they might be getting the best deal. They just want to know that the deal they're getting is the best for them, and it won't be any different elsewhere. So you can kind of see why this has kind of been some of the findings from this report.
Yeah, and within the story, Lucy Tugby, marketing director of the eBay Motors Group, actually says that it's an opportunity for dealers to engage more with customers if they understand that this is one of their big concerns, and this is where transparency really comes into its own, because that is really what these buyers are looking for. They're looking for honesty and transparency. They want to know why the prices are what they are, and also on the part exchanges, why the part exchange values are what they are.
Yeah, I think that's the thing, isn't it, with the part exchange value, that we talk about car buying services and things like that. That they just need to believe that they've got, or know that they're getting the best deal for their part exchange when they take it into a dealer to swap it in.
Yeah, and as I think we ran a story some months ago that Neil Adley was talking about part exchanges and this move away from the sort of traditional belief of nicking the part exchange. That shouldn't be happening anymore.
Not at all. And heading over to AM Online now, and this is Mike Lavery launches Cambria investment company to boost automotive sector. And as Curtis alluded to at the start there, that Cambria Investment Holdings has recruited Mike Allen from Zeus to head the new investment company, Cambria Private Capital. Now, hopefully, we'll be able to get Mike on, or Mike Levy, or even both of them, to talk through what the plans are with this. But this is a big move for these guys, particularly in terms of what Mark has been doing with the Cambria automobiles over recent years and how he wanted to diversify and go into different areas.
Yeah, because I guess it all really started with the delisting, the successful delisting of Cambria back into private ownership. So Cambria Private Capital is being launched with an initial fund of £10 million and will make investments of up to £1 million in startups and scale-ups. And in the piece, it says it's seeking post-seed stage businesses with proven revenue models addressing specific industry problems. And the new, I mean, it's effectively a new venture capital business aimed at SMEs in the automotive sector, automotive retail sector. And that is to be welcomed, because there are a lot of these startups that just need that extra push, that extra budget, that extra backing to go to the next stage. And this is what Cambria is looking at.
And you can see with the lineup, with notwithstanding the others that are involved with it, just with Mark in terms of what he's done with the Cambria business, and obviously Mike in terms of where he's been involved in many businesses as startups and non-exec positions, and his position at Zeus Capital kind of gives that big opportunity. And just to sort of finish off there, the investment committee includes Mark Lavery, who is founder of Cambria Automobiles, Mike Allen. He's the investment manager, Paul Budden, who is the Group Chief Financial Officer at Cambria, Rodney Smith, who experienced board member and former finance director. You've got William Carnley, who is the partner at King and Spalding and non-executive director at Cambria, and Michael Burt, who is the managing partner at the Promethean. Get that out today, Curtis. Yep, and NED at non-exec director at Cambria.
Yeah, and that's a pretty formidable team, isn't it?
It is. Yeah.
So stay tuned, as we'll have the rest of the week's big headlines after this word from Stephen Whitton.
You're listening to all the chatter that matters on Motor Trade Radio, powered by eBay Motors Group. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand wherever you are on your podcast feed. Next up is our latest Menable moment, looking at mental health and well-being awareness, issues and best practices across the automotive sector, with me, Stephen Whitton.
Guys, it's Menable Moments time again. Hope you're well. On my travels again this week, I'm actually talking to you from the car. So hope it sounds all right and you can't hear all the ambient noise of all the other traffic. But anyway, hope everything is good in your world. And recently, I've been doing more and more work with managers through our Wellbeing Winners program. And one of the little tools that we use is a little pie chart that talks about 5 critical success factors to achieving mental wealth and the effect that will have across your business. And so what I want to do for this Menable Moments is to just share with you an outline of what that is, just to give you something to think about. So imagine you've got in front of you a little 5-part pie chart. Wow, I'm a poet. A little pie chart in 5 bits, and each piece represents one of the 5 following areas. And what I'd ask you to do is to give each of those a score out of 5. So the first one is management commitment. How committed are you to the well-being and particularly the mental wealth of the people around you? How aware are your management teams of mental health issues and how they can arise and how business can contribute to those? So the first one is management commitment. Give yourself a quick 5 or score out of 5 for that one. The second piece of the pie, communication. How well do you communicate a message with the people around you? Now, as human beings, we are great at reading more into what people don't say than what they do say. So clear and crystal clear communication in a business is absolutely essential. For many people, especially people like me who are a bit extrovert, who like to know what's going on and what's happening in the area around them. So again, give yourself a score out of 5 for communication. Third one is training. Now, we talk about mental health, and recently I've been doing some stuff with some mental health first aiders, and that's brilliant because a lot of companies have then put those people through that course, tick the box if you like, and got them a little bit of a qualification and so on. But that's not the end of it. What else are you doing around training, and particularly training managers around all the areas of communicating and making sure that mental wealth and good mental health exists in your business? So again, give yourself a score out of 5 for that. The fourth area is recruitment. Now, how much does mental health and all of that stuff, how much does that fit in your recruitment processes? And I'm not just talking about in your job offers and the people that you employ, but also does it appear in your induction processes? Do they understand just exactly what your company stands for when it comes to mental wealth? And the final one, and the critical bit for me, is the area of purpose. How much do your team feel that they are connected to the purpose of your business? Now, in the past, when I've asked people in businesses, well, what is the purpose of this business? They typically relate it back to making profit or making a return for certain people or shareholders or whatever. Well, of course, that is obvious within a business, but that's not the purpose. That's an objective. What is the purpose of the business? Why are you actually there? What are you trying to serve? Now, that's a tough one to think about, but ask yourself a question around all of those and give yourself a little score out of 5 for each. And literally go from there in terms of what happens next with your teams. Ask them what they think. Ask them what they would score you. And we did this exercise recently, and a particular manager scored themselves really highly on the area of communication, for example. And when we asked the team, their scores weren't so complimentary. So what that very much did was cause an opportunity to have a little bit of a conversation. So, something to have a think about. 5 critical success factors for mental wealth, mental health, well-being across your business. Just have a little bit of a think. And as always, if you want some help, support, a little bit of a chat, you know how to find me. Stephen.Whitton@menable.org. Have a great weekend. Enjoy the rest of the podcast. Take care.
Well, thank you very much there, Stephen. That's actually quite an interesting concept, isn't it? 5 critical success factors for mental health. And I particularly liked his anecdote about the manager who raised himself rather highly for comms, but not that wasn't a view shared by the rest of the team, which, you know, in my experience, that does actually happen quite a lot. Not me personally, but
Did you score yourself then during that?
Yeah.
We'll have a conversation off air on that one then, Curtis.
Okay.
It's quite nice that he was talking about crystal clear as he was trying to drive his car whilst recording the podcast. He was concerned about the noise in the background, but again, a lot to think about in there in terms of how people perceive you and how you perceive yourself is a key element of it within people's behaviours.
Yeah, definitely. And if you'd like to get in touch with Stephen, you can email him direct at stephen.whitton@menable.org. And that's Stephen with a PH. Or you can go online to menable@menable.org and find out how Menable can help you and your business.
And moving over to car dealing now, and I think not that we had the scoop on this, but we did certainly interview Pete Waddell a while ago, who intimated about his expansion plans and areas that he was looking for.
He did say there was a big announcement coming, didn't he?
Yes, yeah, and subsequently it's been covered in Car Dealer, and Mr. James Batchelor has actually interviewed Pete Waddell on Car Dealer to talk through the acquisition. But basically, Big Motoring World snaps up 2 available car sites and aims for a 1 billion turnover. So this is that Big Motoring World has bought 2 available car sites, comes as the company eyes significant growth for 2024 and a £1 billion turnover. And Boss Pete Waddell did actually speak to Car Dealer on this, but they bought 2 of the sites off Michael and his father Graham Bell, and they bought the site on just off the M62 there in Leeds, between Manchester and Leeds there, and the Cannock site, which will leave available with 2 sites, which is one is their flagship site in Castle Bromwich. So yeah, it's a big shift here for him, isn't it? Moving up north and into more car dealers.
Yeah, and when we spoke to Peter Waddell from Big Motoring World back in May, if you can believe it was that far back, he was actually talking about this national ambition for the business. So as you say, this takes the business much further north than Peterborough, which was its most northerly point beforehand. I mean, because its main strength was in the southeast. It's grown from the southeast up to Peterborough and now as far north as Castle Donington. But from our conversation with Peter back in May, it won't stop there. He wants to go further. And this is a good fit. It's a good fit for the business. As you say, it's 2 sites. And this will actually bring the Big Motoring World headcount up to 8 sites operating across the country.
Yeah, and sticking with Car Dealer, so going over to Motor Trader. Sorry, Curtis, I threw you off track there, didn't I?
You did, yeah.
What's he talking about now? So going over to motortrader.com, and this is an interesting report and a very poignant report from EMaC. That maintenance plans payable monthly instalments are on the increase, and this is where you can put your service and maintenance of your vehicle through more credit and in terms of pay your bills monthly rather than on a one-off basis. And this is something that you've worked with EMaC on, isn't it, I think, Curtis?
It is, yeah. I did have a conversation there with Sir Canobers, who's EMaC's Director of Maintenance Plans, whilst putting the press release together. And what they're seeing as a business is this shift towards paying for maintenance plans on a monthly basis through a subscription. And he was saying that it's risen by actually over 1,000% in the year to date. So that just gives a measurement of how much this is actually changing as customers move away from the one-off fixed term payments. And a lot of this, as Serkan said, is down to the ongoing impact of the cost of living crisis, high inflation, the introduction of consumer duty, and also for dealers, this increased focus on customer retention. So rather than selling a maintenance plan as a one-off fixed payment, and not potentially seeing that customer on an ongoing basis after that, these subscriptions just mean that you're in touch with that customer a lot more, and you're building a relationship with them throughout the ownership of the vehicle. And when you think about it, maintenance plans typically cover things like extended warranties, servicing, brakes, wipers, batteries, tires, MOTs and breakdown assistance. So this is a good way of just spreading those costs with all those challenges that I just mentioned.
Definitely. And it's not necessarily getting any easier out there in the consumer spending market, is it? So it's probably nothing that's going to go away anytime soon, in being able to spread your costs for these costs of maintaining your vehicle. So moving on to the final story of today, and this is over to Motor Trade News, and saying that strong RV is crucial to success of new Chinese manufacturers. And this is from Darren Sinclair, who's the Chief Commercial Officer at the Motor Retail Technology Specialists with iVendi. And this is it kind of plays into we're moving into the marketplace with increased levels of Chinese and operators from Vietnam and other places moving into the UK and Europe. But crucial with this is that brand strength and the strength of the residual value to make it affordable. Because that has a significant play in terms of that PCP payment and affordability of the consumer. And we've seen what RVs can do, particularly in the battery electric vehicle market, when they start to fall heavily, as they have done since October of last year.
Yeah, it is an interesting one, this, because within the story, they cite the MG experience, because MG obviously done very well selling new cars on PCPs, and MG are a legacy brand, even though they are, under different ownership. They were acquired some years ago by Shanghai Automotive, but they have built up a following in the UK, and we see that when we report on the SMMT new car registrations. They've grown their market share, but they're doing that pretty much on the back of having a good finance proposition for buyers. And this is what Ivendi are looking at. And there's a lot of overseas brands, mostly Chinese, coming into the UK with no brand legacy in the UK. So the challenge for them is to build that confidence and look after their RVs, control the RVs by pricing, offering good finance, good PCPs.
Definitely. So hopefully there's a lot to cover. We've had a lot to cover this week in terms of the interviews. We've got a potential special interview coming up with the Swansway brothers. It will talk about their market and what they've been up to as well. And that's in addition to next week's podcast interview with Devon Martin, who will go into those figures we mentioned right at the start of the show in a lot more detail and put context behind some of the numbers there. But busy week. I think my voice is starting to go now, Curtis. I think it's been one of them weeks so far. I need to stop talking.
Well, hang on in there, because we've got more recording to do. So, but that's for another day. That's all for now. Many thanks for joining us on the Motor Trade Radio podcast. We're back during the week talking to CAP HPI's Darren Martin about those October used car values. But until then, it's goodbye from me.
And it's goodbye from him.
You've been listening to Motor Trade Radio Podcast, powered by eBay Motors Group. We'll be sharing all the links from this week's headlines on Monday morning. So to make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.